Hi and welcome to the Market Alert for Monday the 19th of July 2021. America goes on a buyer's strike. Explosive inflation leads to record collapse in home car purchase plans, etc. Consumers' complaints about rising prices on homes and vehicle household durable goods has reached an all-time record. Well, that's interesting given the fact that the price of silver is being slammed on the overnight as I actually read these sort of headlines, because if we have got the true inflation, we should see the metals moving to the upside, which we're not at the moment because there is a manipulation of driving the dollar to the upside. The Greens hijacked Biden's $3.5 trillion budget proposal. That could be a blessing. It depends which way you look at it. It'll be a blessing in the fact that they'll be able to pump the dollar to the upside further. Because that'll be $3.5 trillion less that they've actually added to the debt pile. The Democrats' congressional proposals keep getting sillier and sillier. I'll say nothing on that one. It's if you got half a brain cell, you can see it. And ultimately, of course, what happens when the chickens come home to roost? And I think the subhead is absolutely sums it up. The Fed and the Treasury are locked in. They cannot reverse course without causing a major upset. No, they can't. They can't increase interest rates without collapsing the stock market. They can't taper without collapsing the stock market. So, yeah, they've painted themselves into a corner. So have a quick look at the news for this week. Today and tomorrow, Monday and Tuesday, very quiet. Wednesday, quiet. So nothing happens really until Thursday. The market's going to make its own direction. We'll look at these as we get closer to the actual dates. But Thursday and Friday it picks up a bit there. Implied volatility, let me just drag this in. We're up to 1443. This is increased from Thursday's 1376, so moving up slightly there given the down day on Friday. So let's have a look at the markets on Friday. Let's play catch up, see where we are. Let's start off with the Dow as we normally do. Here you can see on Friday we got back to the all-time high. The market sold off, got within a few points and then moved sharply to the downside. And overnight also the market is moving lower as well. So we're stuck at 62% at the moment, below the 20 bar moving average. You've got your 78 and 89 down at this level should prices continue to move lower. Crucial level for the Dow. Like I say, there's no news for the next couple of days, so it'll be interesting to see how the market reacts. At the moment you can see we've got some support there down at the S1. We've got Friday's close and Friday's low here. DP level, the 200 MA, and then back to the upside here. So if you wanted to measure back to the upside for the Dow, then we have this point here that juts out and this low at the bottom. So we can go back to the swing high and low and draw in the upside targets there in the 30-minute chart, which is a nice time frame to actually look at these levels. In the DAX, we can see that we a bit weaker than the Dow actually, because we've been short for Thursday and Friday, trading to 62 on Friday from this low to this high, and just sitting at 78 at the moment, 89% as well down here, which again you can see all you have to do is just look at the low and then just come up a few points and you can soon work out where the 78 and 89 is. If this is broken, then we've got from here to here we come back to 62%, and if this got broken then we just go back to this level and draw in a few more. Again, in the 30-minute chart we get a nice idea of where we are. The market moved higher on Friday to begin with, and then mid-morning decided to sell off, and then in the afternoon it continued. And overnight as well, the market has moved over 100 points to the downside, but is now showing some sort of support as we look at this bigger time frame from here to here. You can see that we're back to 62% of the move there, or 78 actually would be more the place there. So there we can see we've got a bit of support there, and just like the Dow, there's Friday's low close, the DP, and then the R1, and then as we move up a bit more, we've got the high of Friday there as well. So let me just get rid of this, and from here, because that one is the last swing, actually sorry, this is the last swing here, so just to get a short term there from the overnight, this would be the areas of resistance, prices moving back to the upside for the DAX there. Just have a quick look at the 2-minute time frame, just to have a look inside of what's going on in the bigger time frames. There you can see the market moving lower overnight, and prices then finding support down at the S1 with a bit of a cluster there of volume. We'll see what the futures does at 7 a.m. Meanwhile, in the metals, as I mentioned in the intro there, they are being hammered. We'll start off with the dollar. You can see that we've got this high up here, 93.46, trying to break out of this resistance here. If it does, then we go up to 93.029, which will then put more pressure on silver, which is already breaking the fibs that we had measured in from the downside. The 89 has been taken out, and this means that we're heading down to these sorts of levels if prices don't hold. We do have a cluster over here. There's a bit of hope, but given the opportunity, JP Morgan and Co are going to hammer this to the downside, and it's very difficult to fathom why, because when you look at gold, you can see that different picture completely. It's holding really well, given that the dollar is moving to the upside. So from here to here, and you look back and you think, well, where's the sell-off in gold compared to silver? So silver again is the most important as far as I can see, and given the fact that it's used in all of electric cars and everything else, the suppression of the price of silver is just absolutely blatant. Never exceeded its 1979 2011 high of $50 an ounce as of yet. I have absolutely no doubts it will do at some point, but any opportunity to move the price to the downside and hammer it, they will do. And we saw this again on Friday when you look at the intraday for silver. 230, down she goes, and again you've seen that pattern for the last few weeks where they've just been moving. You can see it. You just drag the chart across and you'll see exactly when the 230 session is, and there it is. As soon as the COMEX, within an hour of opening, they just love to monkey hammer the price down, and that's what we're seeing there, and a continuation at the moment. 25.50 is where we're at the moment. Very important level. Again, you can see them buying back here, but when you look at the daily chart at the moment, as I've said for the last few weeks, it's not looking good. It looks like it's going to get pushed further to the downside, and that's fine by me. I'll just buy more. I'm in this way down at $13 an ounce, and if you want to bring it back to $13, feel free. I don't mind. I can go in at more per point, because it is just pure manipulation. At some point it will stop, and then when the market reverses, it will be unstoppable to the upside, as it's been the same on the downside for God knows how many years. So yeah. Right, let's move on and have a look at Friday in a bit more detail. We started off, I'll just bring the back, we had a bit of a sell-off to begin with, down to the 200 MA, and then we saw the buying coming into the market, which you can see here. Quick reversal, moved the market back to the upside. You can see that we're 89% there, and then the market moves sideways, and then we start off with a good move to the upside, which is reversed in the next 2 minutes, and the next 2 minutes down to the close, where the market then starts to come back. So quite a volatile start to Friday's session. I marked up 89% from here down to here, just to see if the market would stop at this level, and that's exactly what happened. You see the selling coming in here, and then prices moving to the downside to the DP level, then coming back, having a retest, and you'll see them come all the way back, and that level once again stops the market, with prices once they've done this, then trading sideways to lower. We then had a sell signal, and everything set up for this to move lower, except that it didn't, and let me show you why it didn't. So let me just go a bit more as the market came back, and then here watch the volume in this bar here. You can already see that it's greater than the previous bar, and yet the markets can't break the DP level. So it's already telling me that there is support coming in at this price to move it back to the upside. Purely and simply got this huge, greater volume, less in range than the previous bar. Now, if it's the same volume or more, then you would expect the market to move lower, or if it's greater than the previous bar, you'd expect it to, if it was all selling, it would continue to move lower. But on this occasion it isn't, it's narrower, so that means it must be absorbing the sell orders, and there you can see that now completed. I'll just show you this bar here, and then the market starts to reverse off the DP. Not only that, but from this low to here, if I draw across there, we can see that that's going to be around the 78.89. Well, certainly is the 78.89, and I draw that in later. The trouble is I get used to seeing this on the chart, that tend not to draw them in, because I can just look and go, oh, that's 89%. So the market came back to 89% there and stopped for a bit. There's the ones I drew in for you there, where they brought back in down at there. So you can see that there, and then 89 we need to take this out, which the market did, and then we get to mid-morning and the market trades up to the BRN, and then the market sells off. Again, you can see I'm just drawing in these retracements. So I was sitting at the desk and then just drawing them as they came back all the way down through the morning, as the pajama traders came on board with the Dow, and then just trading sideways through the morning. So I'm just going to fast forward to the afternoon. Now here we've got again that same situation, 89% before the market then moved up for the news. But the afternoon was interesting as well, because we opened up at the 200 MA, and then the market just sold off to the downside there to the previous day's close, then all the way through to the low. And again, notice prices failed to close back above the 5-bar moving average. This is a momentum average, allows you to see what's going on. So the market stops at the S1, finds a bit of support, and then moves down a bit further, and the momentum continues. Notice once we're closing back below the 5-bar moving average and the BRN here, prices continue lower. We get a bit of a bounce here, one close above the 5-bar, then closes back below, and the momentum stays to the downside. Now this is the type of price bar that will stop a down move. You'll see it here. See the volume build there, highest volume bar for the afternoon, and that shows that the shorts are taking profits as they come out of the trade, having been in from up this sort of level here, which is 150 points. And then what the market will do is churn. You'll see the market coming back, and then watch again. Notice this time that we've got the market reversing to the upside on an increase in volume there, and that's at 89%. We then get, so you can see there's some selling there as well, very narrow bar failing to move to the upside. And then again, you'll see another volume bar there, huge volume, and the market's not moving to the downside. So we're getting this sort of situation at the moment. And then the market will be free once they found support. Again, notice the volume stuck in that sideways move. People think there's nothing going on at when the market's trading sideways like this, but there is a huge amount going on when you actually look inside of it and you understand how to read the volume with the price bars. So what I did here, we're getting towards the end of the session, was drew in so that you could see if the market would go back to the 89 fib, and we eventually got within a few ticks of it. So all of this happening down here was for a reason. We also had this happening here, but the market failed to close above the 5-bar moving average and maintain it, and once that closed, it then moved the market lower, like I say. And then you get this, the climatic action here, and then the fib retracements before the market then starts to move to the upside. That's how it works usually. You will get V-shaped corrections in smaller time frames, but in bigger time frames you need that churning, and if you're getting that in a smaller time frame, then there is a lot of weakness around as well to try and bring the market back. If there isn't much weakness, you will get a sell-off with a V-shaped correction, but if there is, then it will have to consolidate, trade sideways, and you get those subtleties of the volume before moving to the upside. Okay, that will do it for this one. It'll be an interesting week given that there's no news today and tomorrow, just to see how the market will find its direction. Hopefully back to the upside, because that's where we've been for the last 13 years. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.